Have you ever felt like your credit score is this mysterious number that's just holding you hostage? Like you have zero control over it? Well, guess what? Today, that all changes. We are taking back the power. We're going to pull back the curtain on that number and give you a crystal clear roadmap to completely transform your financial future.
Welcome to Finance Deep Dives.
Okay, let's just jump right in. What is this three-digit number, really? And why does it have so much say over our lives? Here's the easiest way to think about it. It's your financial report card. That's it. It tells lenders how well you've been doing on your financial homework. Now, a low score might feel like you've got a D or an F, but the best part is you are not stuck there. We're about to give you the ultimate study guide to get that A+. So here's our game plan. First, we're going to decode what the score even means. Then we'll look at the secret FICO recipe. After that, it's the roadmap, your actual steps to get to 750 and beyond. We'll show you the incredible financial payoff and then wrap things up by busting some really common myths that might be tripping you up. All right, first things first. You can't ace a test if you don't even know what's on it, right? So let's build that solid foundation and figure out what your score is actually saying. At its very core, a credit score is just a number that predicts risk. And, the model that really matters is the FICO score. Get this, it's used by a whopping 90% of top lenders. So when we're talking about fixing your score, we're really talking about fixing your FICO score. So yeah, you can just think of it as a trust rating. A score down in the 500s to a lender, that's a huge red flag. It screams high risk. But a score of 750 or higher, that's a gold star. It tells them you're someone they can count on. Our mission here is to get you that gold star. So how in the world is this trust rating even calculated? Well, it's not some kind of dark magic. It's actually a recipe with 5 key ingredients. Let's look at exactly what's in the mix. And here it is, the FICO recipe. I mean, just look at this for a second. Payment history, that's 35%. Amounts owed, 30%. Together, that's 65% of your entire score. The other parts matter, sure, but these two are the main event, and that's where we need to focus. Let's start with the biggest piece of the pie. Payment history. This is, without a doubt, the most important factor. Lenders just need to see that you pay your bills on time. And listen to this. Just one payment that's 30 days late can make a high score totally plummet by over 100 points. It is that serious. Okay, next up, amounts owed. You'll hear this called your credit utilization. It's just the ratio of how much you owe versus how much credit you have available. And there is a golden rule here. Try to keep it below 30%. Anything higher starts to make lenders think you might be a little overextended. Now, that last 25% is made up of 3 smaller things: how long you've had credit, any new credit you've recently applied for, and the different types of credit you have. These kind of round out your financial story, but our main focus has to stay on those first 2 big ones: payments and utilization. All right, we know the recipe. Now it's time to actually start cooking. Let's map out the journey. And I want you to think of this not as some quick sprint, but as a strategic mountain climb. It's going to take some effort for sure, but I promise you, the view from the top is absolutely worth it. So our climb has 3 main phases. First is stabilization. This is where we set up base camp and just stop any more damage from happening. Second, we start building momentum. This is the real ascent, where we start forming positive habits. And finally, optimization. This is where we fine-tune everything to reach the summit. Phase 1 is all about triage. We have to stop the bleeding. That means number 1, get every single account current right now. Then, number 2, set up automatic payments for at least the minimums so you never ever miss a payment again. And finally, start aggressively paying down your balances to lower that all-important credit utilization. Hey, just a quick pause in our climb here. If you're finding this roadmap helpful and getting some value out of it, do me a favor and hit that subscribe button. It honestly motivates us to keep posting more of this stuff. Okay, let's get back to the ascent. Okay, once you're stable, we shift into building and optimizing. To build new positive history, you can use great tools like secured credit cards. And to optimize the history you already have, a huge tip is to keep your oldest accounts open. That helps preserve the length of your credit history. And lastly, be smart and strategic. Don't just apply for a bunch of new credit all at once. So why? Why are we doing all this? Let's talk about the payoff. Because a high credit score isn't just a number. It translates into real, cold, hard cash in your pocket. Just look at this data for a car loan. Someone with a great score gets an interest rate around 5% on a new car. But someone with a subprime score, they're paying over 13% and almost 19% for a used car. That is a massive, massive penalty for having a low score. So what does all that percentage talk mean in actual dollars? Well, over the life of a pretty standard car loan, having a good score can save you more than $11,000 just in interest. Think about that for a second. That's a family vacation. That's a fully funded emergency fund. That is a life-changing amount of money. And finally, let's clear the air. There is so much bad advice and misinformation out there, so we're going to bust some of the most common and damaging credit myths to make sure nothing holds you back on your journey. Okay, here's a huge one. I bet you've heard this before. The myth that checking your own credit score will actually make it go down. Is there any truth to that? Nope. Absolutely false. 100% myth. Checking your own score is what's called a soft inquiry, and it has zero impact on your score. A hard inquiry only happens when a lender pulls your credit report because you've officially applied for a new loan or a card. So please, check your score. Check it often. It's one of your best tools. Look, improving your credit score is definitely a marathon, not a sprint. But every single marathon starts with one single deliberate step. Maybe for you, that's setting up autopay today, or maybe it's pulling your credit report for the very first time. The journey to financial freedom is yours for the taking. So the only real question left is, what's your first step going to be?